The markets are trying to claw back to the day's high, but there's a smart recovery which is at play, and we are just a day ahead of the expiry. At least holding on to the 16,600 level. Above that, Nifty, Bank Nifty too is doing pretty well. Earnings quality, a lot of other factors kind of helping the market to claw back. In fact, commentary from IMF last evening, though, may be showing that there is issue on global growth front. India actually stands tall within that. In fact, let that be the first question with Mr. Shyamsunder Bhat, who is joining us today. Mr. Bhat, there is clearly the narrative the market has moved on from inflation towards growth or the lack of it. But at the same time, the data which is coming in seem to be suggesting that India stands very different in terms of quality of growth versus the rest of the world. Can we be decoupled, or economy may be different, but markets will be very coupled?
Thanks, Ajay. Let me put it this way. I think in today's world, decoupling is something which is very difficult. Therefore, to an extent, we will continue to be governed by what is happening in the global economies and markets. But yes, I think on several parameters, India is better placed as compared to most of the other economies, both emerging markets and developed markets. Particularly because there are several factors which are of concern in most of the other emerging markets. So whether it is economic sanctions, whether it is political stability, whether it is currency, and of course, earnings growth. So in all these parameters, India does stand out. And I think this is what will bode well for India a year down the line, which is when we think that we will again see a reallocation of FII money back into India, compared to the kind of relentless selling that we've seen for the last few months.
Okay, let's move on and talk about the quality of earnings. If you could just share the earnings scorecard so far, the kind of large company commentary is coming in, be it L&T, many others. How have you read the quality of earnings reported till now?
So in terms of the earnings scorecard till now, it's been, I think, broadly in line with expectations. So we obviously have had some positive and some negative surprises. But two things clearly stand out. One is we have to keep in mind the base effect of Q1 of last year in many of the companies. We have to also realize that on the top line front, we are not really seeing disappointment. We are seeing a positive surprise on the top line front across companies. So whether it is FMCG companies, or whether it is IT companies, or even industrial companies, the margins clearly is where the issue is. I think this will possibly remain a point of concern for the next couple of quarters as well. So we are coming off the back of a very strong earnings growth in the last year, and therefore going forward, the earnings growth is likely to be significantly lower compared to what we saw last year, and this actually is what will hold back our market in terms of Nifty performance for the next few months as well.
Okay, let me play out a piece of conversation with SNS and Mr. Shankar Raman of L&T, and I'd like your opinion on the capital goods space, especially since 30% of L&T revenue is actually global in nature. Still, the market loved the commentary. Let's play that out, and we'll talk about capital goods as a space.
Some of the stalled parts of the high-speed rail is now getting revived. And we are hopeful that some of the issues that were surrounding the project in terms of the depot space and the impact it could have on the environment, etc., hopefully will get resolved, because the current government seems to be very keen on getting the project completed. We expect to grow between 12 and 15% on the orders that we won. We won about 1.9 trillion rupees worth of orders in the previous year, FY22, and we were hoping between 12 and 15% growth.
Mr. Bhatt, how do you analyze? Because when L&T management says that order book, inflow guidance 12 to 15% and unchanged, even in a bit challenging environment, then everybody sits up and takes notice. How do you read through this commentary? What does it mean for the entire space as a capital goods?
Right. So while I'll not be able to comment on any particular company, one of the reasons actually for us having been positive on the markets for a large part of the last 2 years, apart from, other than the last few months when we've been cautious, has been this our current government's focus on capital expenditure and the ability to have the readiness to have a larger fiscal deficit uh, to allow for the kind of spend which is required on capex so that the growth is not impacted. And this continues this year as well. We had some concerns a couple of months back when we had these large excise duty cuts because on fuels. Because the impact on the fiscal situation could have led to possibly some cutback on the capex plans. But we've seen a reiteration by the government that they will not really cut back on capex in spite of the shortfall which might happen on the revenue front. And therefore, this is also the reason why this is an overweight sector for us in terms of positioning in our portfolio.
Okay, how are you analyzing the volume growth of the consumer space? HUL came at 6%, way better than 2-3%. Diageo last evening came it at 18%. Even Asian Paints volume growth was at a 6-quarter high. Without commenting on any particular stock, the volume growth versus valuation argument of the consumer space, how do you analyze that?
Right. So I think you rightly mentioned, so volume growth in many of the FMCG companies has been a positive surprise for us. And so the expected impact on consumer spending because of higher inflation does not seem to have happened. So consumers have continued to spend, and this definitely bodes very well. Valuations clearly are the concern. So FMCG is an underweight sector for us. So while we do have a reasonably large holding as a part of the portfolio, we do not have as high a weight in the sector as it has in the Nifty 50. Reason being that the kind of earnings growth that is expected over the next 2 years is more than factored in into the valuations. Because while we are seeing volume growth happening, it will not necessarily translate into the kind of profit growth because of the impact on the margins.
Let's hear out Mr. Singhal, Asian Paints, what they had to say about the volume growth trajectory and also margins, because they have taken some hikes, some more are being indicated towards.
So one thing for the paint industry, what we have seen is that the price elasticity, I think, is good because in the entire painting exercise, there is a large labor component which is involved. And therefore, the paint prices, if they go up, the effect on the overall painting is a little bit marginal, which kind of comes in. So I think that is a positive factor which goes for our industry. But having said that, what we have definitely seen is when you look at the T3, T4 markets, which are the smaller markets and so on and so forth, there we have been seeing that there have been downgrades which are happening from the premium and the luxury products to more economy products to that extent. And a small amount of deferment is also there from something which is a category like painting, which can be deferred for some time to that extent. But however, what we have seen is that the T1, T2 markets, including the metro markets, they have done extremely well, and the support of premium and the luxury products from there has been quite good overall in terms of what we have seen. So overall, I think the consumer demand has been pretty good in the 3 months as we have seen. And that is why I think we've got a volume growth of 37% and a value growth of about 59% this quarter. And we feel that the impact of inflation has been marginal, which has happened. If it has happened, it has led to some downgrades to economy products.
Mr. Bhatt, how are you placed on some of the deep cyclicals, domestic-oriented companies, especially from the automobile space, auto ancillary space, do you think they're out of the bad phase and now we have a good cycle ahead of them?
Yes. So while do not have an overweight position, we are broadly neutral as far as the auto space is concerned. Uh, Most of the issues which have dogged the sector over the last couple of years, so we had input supply issues, as well as we've had the higher metal costs. Both are getting addressed. We know that we've seen a very sharp fall in metal prices. There's an expectation that the semiconductor issues also are largely behind us. So clearly, this sector is poised to do well. But to an extent, it has already got partly factored in because this sector has done well. The stocks from this sector in the last few months, and therefore we could see a brief pause in this sector before a further up.
Let's also talk about the utility space. We have seen a very good turnaround in utilities, both private sector as well as PSU utility companies. New renewable related peg coming in, many of them. And now we are talking about or progressing into when the electricity amendment bill will be taken up by the government. Not sure whether you have read it right now, Mr. Bhatt. I think you will have to, because if you want to analyze how the fortunes of the utility space may change, you may want to keep a handle on that. But we can give you a preview of what to expect there. My colleague Prakash is following that story. Let's listen into that and then we talk about the utility space with you. Prakash?
See, the Cabinet and Cabinet Committee on Economic Affairs is going to hold a very crucial meeting today, and the sources are informing that a series of items listed for the Cabinet to consider. The first one is with regard to the mega reform in power distribution sector. Cabinet may consider and approve Electricity Amendment Bill 2022, which will pave the way for the multiple companies to operate in the same area. It will also provide an opportunity for the consumer to get service from different distribution companies based on their service quality. However, sources are also confirming that the important provision that is related to the complete delicensing of a distribution sector have been dropped from the new draft bill to build consensus. Apart from that, the DBT provision from the new draft bill has also been dropped. Apart from that, one important agenda is there for the Cabinet today, that is Energy Conservation Amendment Bill 2022. Through this bill, government intends to provide incentives to the companies which is saving energy through carbon credit. Apart from that, the proposal related to BSNL revival may also be approved by the Cabinet. The proposal of merger of BBNL with BSNL may be considered and approved by the Cabinet. Apart from that, expansion of 4G network in the rural areas may also be approved by the Cabinet. Cabinet may approve additional fund for this regard. Last but not the least, one proposal is related to the additional fund for the BPCL subsidiary BPRL is also in the agenda for the Cabinet today, and the Cabinet may provide additional 2,500 crore rupees as an additional fund for the BPRL.
All right, let's. So we're talking to Mr. Bhatt about utility space. How do you like that space, and where would you like to play it? By the renewable thing or even some PSU kind of utility companies, Mr. Bhatt?
Right. So we do not have much of an exposure in the utility space. And actually, today we are in a situation where the listed plays in the utility space do have, the renewable arms also within that. Going forward, yes, we will possibly, when we have a separate listing of the renewable arms, things might be different. But as of now, we are not seeing a separation of the two. There is a combined entity. But yes, we will go through, the amendments like what your colleague just mentioned, and take a call. So as of now, we do not have a large view.
All right, Mr. Bhatt, thanks very much for joining us with your thoughts on the market.